So at this time of year, people tend to take some time out between Christmas, New Year, and just after they've got a bit of holiday. They tend to look at their financial affairs as well as their tax affairs. They've got their tax return due at the end of January, and with that comes a shock of the amount of tax they might have to pay and the payments account for the next year. So it's quite an important time for looking at finances and looking to plan your affairs for the future. Unfortunately, nowadays tax planning is about taking a long-term approach, about identifying what you can do now, not just for income tax or capital gains tax saving, but maybe the longer approach about estate planning as well. Quite often advisors will give advice about the immediate tax concerns, so this may be how to save income tax or mitigate your capital gains tax, but when it comes down to the important things in a few years' time, it may be important to look at either whether you want to pass assets on to future generations and how you want to do that. And then at that point, you may find the previous planning that you implemented doesn't fit with that plan now. So it's better to have a holistic approach and look at tax planning for a longer period of time. So if you are sat down this year thinking about how you structure your affairs, whether you reorganize your company or whether you invest in tax relief investments, so you get some income tax or capital gains tax relief, or whether you're planning your estate for passing to future generations and looking at the potential future demise and how those assets are passed in a controlled manner, remember to look for the longer term. If you want to discuss any of these points for initial consultation, by all means do contact us. Happy to give help where possible.